We got 15 people from home.
Good morning, everyone. I'm going to call to order the Will County Executive Committee meeting for November 7th. And Lana, can you call the roll?
Winfrey, Brooks,
Here.
Frizzalone, Harris,
Here.
Markham,
Here.
Mustis, Ogalla, here, Van Dyne,
Here.
and Ferry. You do have a form.
Thank you. Jackie, call the roll. Sorry, we did that once. Do the pledge, please.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, first off, we have approval of minutes. Executive Committee, I'm looking for a motion to approve for October 3rd. Moved and seconded, all in favor? Aye. Opposed? Next we have executive session minutes from the Executive Committee of October 3rd. Moved and seconded, all in favor? Aye. Opposed? Motion carries. Executive Committee from October 10th. Second. Moved and seconded, all in favor? Aye. Opposed? Motion carries. Executive session minutes from the Executive Committee, October 10th. Moved and seconded, all in favor? Aye. Opposed? Motion carries. Next is old business, which, unless it's in invisible ink, we have none.
Can I bring up something I think is old business, even though it's not on the agenda, but I think it should come under old business, or should I wait till the end? I'm going to say it one way or the other. I don't know if you want to hear it now or you want to hear it later.
Never. I just walked it. I don't know what it is, but never is good.
No, I think this is good.
Is it a long dissertation, Jim, or just a...
No, well, it could be. It could be, so that this way I'll do it now,
Okay.
and then you can accelerate everything else if it takes longer.
Sure, acknowledges Jim Moostis.
So, you know, I notice there's been continually an issue on this agenda, and it's about the marijuana opt-out. And I noticed that we were going to have a committee of the whole on November 14th, which was so we were going to discuss the opt-out part, or marijuana in general, legalization of cannabis. I should use the word cannabis, of cannabis, and the discussion of opting out would be there. And now, and then at a land use committee, you know, there was a fairly lengthy discussion that the land use department was going to do no work on the cannabis issue until we decided whether if we were going to opt out. Now all of a sudden, the land use department has come out. Well, here's it's going on the land use agenda. You know, I'll be there, of course. But I mean, there was a discussion, including the state's attorney's office recommended that we don't do any work until we decide whether we're going to opt out. So now the whole opt-out opportunity seems to be disappearing here. It's not on this agenda. It's not on committee of the whole has been canceled. So now I have to say, who's deciding this? Because I have to tell you, it's a decision of this committee. No individual, no other chairman, no anybody. The committee decides this committee decides what's on the agenda. And I will tell you that over 20 years ago, then the board made it very clear to me, because I was the chairman, that I would put everything on this agenda that was up to the committee would have the opportunity to put things on the agenda. So I have to say that before we start voting on land use and before we start talking about taxes and so forth on cannabis, which I support whether we opt out or not. So you have to understand, we can only opt out. If you take no action, you're in. And it seems to me now there's being an attempt to take no action. So that's my concern. I think this committee has the ability to add it to the agenda, to one of the committee agendas, and has the ability to put it on the county board agenda. And I would say is let's not try to kill something in the back room if that's what's being done. Certainly it seems to me that it's kind of suspicious that it just disappeared. And the board doesn't even have the opportunity to even have the discussion. Seems to me a little concerning. So, you know, I think because this is an assignment, Mary, I'm going to look at you on this. I think the committee can add additional things to the agenda today. I can make a motion to do.
This is the assignment committee.
The assignment committee.
And
So,
we have always, the committee has always had the authority to add the agenda items. Yes.
so I'm going to make a motion that the opt-out be added to the executive committee agenda. I'm using the executive committee agenda for next week. I'm using that because it's a bigger board, so there's more people here to discuss it. So that's my motion.
Second.
Question. So why would it not go back to land use for the discussion and right to?
They're not the opt-out.
We don't.
They don't decide whether we're going to opt out.
Okay.
They're looking at.
Okay,
Yeah.
okay. But,
If we're going to be doing.
okay, and I see you, David. But secondly, it will automatically become law in January. Is that right?
If we don't.
If we don't if we don't do anything.
Correct.
If we don't do anything.
However.
Okay. Thank you.
Jackie, did you have something?
I did, but
Turn off the microphone.
maybe my comments will be better addressed to Jim separately. So I think I'll pass for now.
All right, thank you. Thanks, Jim, for your comment. Let's move on to the, oh, I'm sorry. Okay. Julie?
Mark, I don't want to sidetrack everything, but is this also the appropriate committee to place a proposal to have a referendum for the motor fuel tax? Because I would like to request that.
The only thing I would say, if I may,
Our
and I would talk to the speaker first. I'd talk to the speaker first. The reason I'm bringing this one up is because it was on the agenda, now it's
So
disappeared.
who should do that?
I think you can request of the speaker,
Yeah.
or this committee to consider it. It doesn't have to. I would just make the request to the office.
Okay, thank you.
Okay.
Joe?
I just want to be clear on the motion and the second. Just so I know while I'm voting, what exactly are you asking for? Because I'm uncertain.
Well, the motion is to put on the agenda discussion of opt-out of the cannabis sales in unincorporated rural counties and have a discussion. You know, look, if the board decides, it's not a matter whether you're for it or against it. What I don't like, and it seems is happening, is, you know, the discussion is being eliminated whether you're going to opt out or not. And we're not being, and we were told over and over, oh, we're going to have to do this. And it's going to be at the committee of the whole, and now it's been canceled at the committee of the whole, and now there's things that deal with land use on the cannabis segment. So it's like, well, wait a second. Especially after there was a fairly strong position of, I think, land use staff and committee, Matt suggested that they don't do a lot of work until we decide whether we're going to opt out or not. And now we're not even having a discussion. So it's to be put on the agenda to have a discussion about opting out and whether we're going to move that to the full county board, and that's what the executive committee does. So I'm just bringing it back for, make sure we get to discuss.
Jackie?
No, Tyler's not.
Well, I think David's been kind of itching to talk, but I will say that I think it's an unfair characteristic to say that land use didn't do any work. Like,
No.
you said that earlier.
No, what I said is they were told they didn't want to do a lot of work
Okay.
on
I
this.
mean, I'm not going to argue semantics, but either way, they're ready to go. I mean, the land use department is ready to present. And
Told them at your committee not to do a lot of work.
I didn't tell them not to
You
do
sure
a lot
did.
of. No, I did not.
I'm going to pull up from this.
I'll
That was
let
the
David
discussion.
talk, but
We'll see David's recollection.
I'm not going to get in the mix on this. I just want to tell you is that, you know, the zoning ordinance has the specific criteria or procedures for text amendments. And the Planning and Zoning Commission is the public hearing body that, by ordinance and by state statute, has to hold the public hearing. So if you backtrack from the December County Board, there's a certain timeline that needs to be kept. And so without having a special meeting of the commission, we are having 2 commissions this month anyway. So it was published for public hearing for commission this month with the public hearing comments to be transmitted to the land use committee and to the board in December so that the board can keep its timeline. At the committee of the whole, it was my understanding is that the general direction is to be prepared to try to go down that path of getting it done by December, okay? You know, preference would have been, of course, to have a direction from the board specifically as to where they would like to go on. But, you know, without that, to keep the timeline, we did prepare 2 alternatives with text amendments that are available, publicly available online on the department's website for the public hearing. So there'll be a public hearing again. Both options are available. We've done what we can do to keep the timeline going, and we're ready to go for presentation to commission at the public hearing to take public comment. And again, it's we have no agenda in this, either for or against. It's just we wanted to do what we could to get this through the process. And we did have contactors from the board office asking us to start to get this ready for, you know, it was public hearing committee, but we talked about it and talked to the state attorney's office and confirmed, yes, it has to go to the commission, and that's why we have it with the commission. So.
If I could, well, if you recall, at that land use committee, I supported you moving forward. I was like the voice of one that said staff should continue to work on this. You know, it was the staff that pushed back a little bit that said, we don't want to do a lot of work on this if you're going to opt out. Did I dream this?
I'm not disputing the fact that we would have preferred to have a direction from the board, but absent that, we gave a professional presentation or preparation for this. And I'm not going to get in the mix of who said what.
I supported you continue doing work. I think we should be prepared regardless. Just regardless, we should be prepared. But anyway, I'm not gonna.
I don't want to get.
I'm not gonna But,
We're just doing what we can. as
my
staff.
biggest thing is has nothing to do with Lane's. It's this fact that we're not even having a discussion now. You're gonna try to bury, not you or whoever, maybe nobody, maybe this is my own paranoia. Yeah, there's not gonna be a discussion on the when it disappears from all agendas, and I see things moving forward, I get a little suspicious. It's my nature.
Jackie?
Is there a requirement that we take a vote? I'm not aware of one.
No,
Okay.
but we said we were going to.
I didn't say that. I never said that. You might have saw it on the agenda and assumed that. I assumed that there was going to be a vote on the pensions, but there was never a vote. It was never added to the agenda.
That was on the invoice of the state's attorney's office.
That's not matter. But now, your motion, if I can ask, your motion is discussion on opting out, or why couldn't it just be on agenda discussion? Why does that be specific to opt in or out?
That's the only option.
But wouldn't that be lopsided
Okay,
on
well,
marriage?
here's what it is. I made a motion to vote on it. You don't want to discuss it, vote no. I'll bring it up again. You can vote no. You don't want to discuss it? Tells me that Lee is on it. But I know you want to have the discussion.
Okay. Thanks, Jim. Everybody for your comments. Lana, call the roll.
Brooks,
This is to put it on the agenda.
For discussion.
Yes, for discussion.
Harris,
No.
Markham,
Yes.
Mustis,
Yes.
Ogalla,
Yes.
Trainier,
No.
Van Dyne,
Yes.
and Ferry.
No.
Motion is approved.
Okay. Next, we'll go back to new business, back to the agenda to new business. And first thing listed is presentation by Misro for the renewal of insurance coverage. Morning, Bruce.
You have insurance, we got
Hey, you can use mine after, as you get better. I'll rent this one too.
Thank you.
Good morning. We have today with us Michael Alicia from Alliant Mesereau, who will be discussing our current risk management program and the renewal. It's been a rocky year in the industry, so he will give us an update. And there's one or two items that the committee will need to decide on with regard to our self-insured retention.
Good morning, Mr. Chairman and County Board members. First, thank you for your time. As Bruce just mentioned, the insurance industry as respects to property, auto, and excess liability have been in a real bad spot. Typically, we're complaining about workers' compensation, but the times have flipped. So with regards to property, we do the renewal and pass it in July, so that has already been passed. But we put all the information in the current proposal. Property values, you know what, I apologize, I'm going to go back to the marketing and the conditions. Besides the negative market conditions in property, auto, and excess liability, there were two large claims that were paid just recently. One was an auto liability claim that had a $2,073,227 impact. The other one was a law enforcement liability claim with a $2,214,000 impact on your insurance renewal. So besides the market conditions, we also had claim issues as respects to Will County that made this renewal a little challenging for us. Please stop me if I'm going too fast. With regards to the property, county values increased 2.83% from $70 million to $381 million and some change. Rates for good, clean accounts this past year, and I've never seen this bad even after 9/11. Clean accounts were going up from 20 to 30%. Accounts that have some property losses on it were about 40 to 50%. While your rate did increase from 5.4 cents to 6.3 cents and some change, which is about 17%, you are still significantly more competitive than the rest of the marketplace, where I'm being generous in saying that they are at 10 or 15%. If we were, I'm sorry, 10 or 15 cents. If we were at 15 cents, that would be more than doubling your rate right now. We did go out to the marketplace and concluded that your property, where it's at, is still the most comprehensive and cost-effective program. The reason for the property increases this year were 3 years of worldwide catastrophic claims, and you can even look at that in the United States. All the claims out of the southeast hurricanes over the last few years, the fires in California preceded by the mudslides that might happen again this year, the large earthquake in Alaska 2 years ago, and then the Midwest flooding this past year. So there's been no lighten up. Thankfully, the hurricane season, knock on wood, has been okay this year. We do expect rates to increase again next year. At this point, it would probably be in your best interest to minimally budget 20% for a rate increase. While we were going into this bad renewal, as soon as we gave information, I was advising Bruce just to let him know where we were at. It changed almost on a weekly basis up until your renewal came through. So we will continue to monitor the property marketplace. Yes, sir.
So we have not put in our new building yet, right? I mean, we
Correct.
So that'll be next year that will go on, the new courthouse, the new health department,
The sheriff's
the sheriff's facilities.
Yeah, so our policy will run through June 30th. So whichever building has the keys turned over by June 30th, we can add on. If the contractor turns over the keys in November, a year from now, we will add it on and it will be prorated. Any building under, I believe, $20 million, I think we're 20 or $25 million. Is it 25 million? So if it's under 25 million, we're not going to get a premium charge. I believe there is one building that is going to exceed that. Yeah, okay. So anything over the 25 million, we will get a premium charge, and that will be prorated on the date that keys are formally turned over.
Primarily the reason I'm bringing it up is for budget reasons, so that's going to significantly increase that cost. You have one building that's probably, let me say, 210 million, another one that's 30 million. So and then some small, we could be adding $250 million worth of properties.
Sure.
What I will do is, once we kind of get a better number of what your values are, I can easily rate this up and use some higher rates as potentially a worst case scenario and update them. The other thing that we can do for premiums is we have a pretty good track record for property. We can look at deductible increases and do studies to find out if it's optimal. Is it worth the savings to increase it to 100 or $250,000 to save, X?
Because right now it's
It's not.
25,000.
Right. We did that same study last year when the board moved from a $1 million work comp SIR to a 1.25. It's called a stratification, and we were pretty since there's not a lot of claims, it'll be pretty easy for me to get this calculated for you and keep you updated as the market changes.
Yeah, that makes a lot of sense. The buildings are new, they're not
Sure.
gonna have any big catastrophic.
Well, you never know. They have an earthquake here, doesn't the fault come through here?
They got so much solid foundation under them, I don't think you could blow them off.
That rock, that's the thing, that rock. Up, down.
I always say a glacier. What's going to happen? Glacier improves.
Sure.
Could be, depending on the weather.
You got the dike down the street, you know.
I know we're in a floodplain.
We're in the valley.
Any more questions on the property? Crime limits remain the same at $500,000 with a $25,000 deductible. In the past, we have provided higher options. The county has declined higher limit options. Primary casualty rates here pretty much remain flat, which that was really good to see. It's interesting that the primary layers are remaining flat, and then the excess is just out of control. So Safety National did a great job on the excess. The other thing, and when we get to comp we can talk about it more, is because we have the primary casualty with them as well as the work comp, they provide us a real nice credit on the work comp, which makes it difficult for our carriers to compete with them cost effectively and comprehensively. So we're getting a really nice benefit from them. They are offering an option to raise your self-insured retention from $750,000 to $1 million, and that will save you about $75,300 in premium. So I broke down your claims. You have 2 claims in the last 10 years that are over $1 million. Both of those claims are actually over $2 million. One's $1.2 million and the other one's $1.1 million, which I discussed a couple minutes ago. In between are below $2.1 million, there is nothing until about $600,000. So within the last 10 years, there is no claims been above 600 and below 2.1. We look at those large $2 million claims as anomalies. So there are 31 claims below 600,000 and above 100,000. About 35% of your claims are between that gap, between 600 and 100. The majority of your claims are below 100,000. 42% of them are below 100,000. So when we take below 600 and add it to below 100, 77% of your claims are under 600,000. So we have not, outside of these 2 claims, we haven't really come all that close to that $750,000 retention that we have. Yes, sir.
Well, first I'd say, are they anomalies or is it a trend that the settlements are just getting larger? Because it seems to be a little bit of that. Sometimes I hear on the news some of these settlements are kind of seem really out of whack to me. But so that'd be one question I would ask: is it just trending to be having settlements? Of course, we don't see. We see the $750,000 because the board has to approve that, so we'll see some of that. We don't see these bigger, higher claims because it's out of our hands. So the other question is when you say it's like, how much can you use? $2 million.
Mm-hmm.
So we have a $2 million claim. Does that mean the insurer paid out $2 million, or we paid the first $750,000 and the insurer paid $1.25?
Yes, sir. The carrier pays everything over $750. So the 2 claims that settled this year, the carrier paid $2.8 million out of their pocket.
Total for both.
Total for both.
So.
So one out of pocket was
we paid
1,450,000
$1.5
and the other one was 1,350,000.
And you know, the only other question I would have, Mary, you know, how our system kind of works, because we don't see that, right? Once it goes to the insurer, we're out of it, right?
Well, I see it. I
You
mean, I do know what the settlement, final settlement is. And I can bring that back to the board if you'd like.
Well, the other thing that I guess I would say, just as a matter of, maybe not this is, well, maybe this is a discussion for renewal, is that when we have these large claims, do we first try to give a, do we first offer up to our limit as a settlement? That's always put on the table?
Yes, and I come to county board and I give you a summary of the case and I ask for permission to exhaust the self-insurance.
I just don't recall you asking for $750,000, that's all. Maybe you did. It's not that I memorize all of
Yeah.
this, but you do.
I do.
Yeah, okay. So we always put out our retention first. All right. Okay. I guess the insurer would require us to do that.
Yes, sir.
Yeah.
I just noticed that, and maybe we don't have the full year numbers yet, but our claim count on this last summary page, on page 18, is half of what it was for the last 3 years. That was like a huge reduction. We've not had anything in the 2 digits for the 11 years I've been on the board. So we've always been in the triple digits. We went from 166 as low as 107, and this year, if it's complete, it's 79. So I'm wondering, is that complete?
Yes, it is. What we call it is a green year. So there's a lot of stuff that has happened that has not been reported yet. So we call it incurred but not reported.
Thank you.
It has not hit the attorney's office or Bruce's office. And also, we also have about 22 more days left in the month before the new policy. There's, you know,
I wondered.
Yeah.
This
so,
number just seems
right,
so starkly different.
Right. So we always call that the green year. The carrier just really doesn't pay attention to it. Carriers for counties this size are looking for 10 years. So to see more trend, and they just throw out the current year. Any more questions about the option to raise the retention to save $75,000?
I don't have any questions.
Okay.
And that's your recommendation, right? Is that your recommendation?
I didn't think that was his recommendation. I thought he was just giving us info.
Yeah, I'm giving you the option. The numbers look like they work, in my opinion.
You only had 2 that was over that threshold? Is
Yes,
that what you
sir.
said? Only 2.
2.
My concern is still we're trending to higher
Correct.
settlements.
And that
in general.
yeah, and that's the push. You know, claims here are going to be much more expensive than they are in Indiana or Iowa. You know, I have something right now, very similar type of loss as one in Kendall County, one in Cook County. One's worth about $500,000, the other one's worth $250,000, just because of where they're located at. So,
I mean, I look at it this way, and that is, look, if we just take the current claim history, okay, so.
Microphone.
We would have paid, say we had $1 million retention prior with those, we would have paid an additional $500,000.
correct.
So, so now you just run the numbers. So if you didn't have any of these claims in 10 years, then you're ahead. If you have 3 of these claims in the next 10 years, you're in the hole. I mean, but it also, I would say, in the underwriting world, I do think this is also the trend. Or if you want any insurance, you're gonna have to gravitate to higher retention. So I think that it's probably something we would have to do to have even underwriters consider us. I don't know if you want to comment on that.
Sure.
But, I mean, I do think that's also, it's been the trend for the last 30 years that I've been around doing this, so.
That is the trend. You are correct that retentions are getting pushed for larger entities. The other trend is Illinois by itself. There are carriers that aren't interested in writing in Illinois that even have offices in Illinois, specific to municipal. We struggle with that. And also, there are a number of carriers that may look at Will County, but because of the nursing home, they don't.
Yeah.
So there is a marketing summary that I have put in there, all the carriers that we have approached, and when you look at the access, it will have a number of excess carriers, 5 of them still waiting to reply. All those carriers declined quote on the access.
Since you brought that up, and I was going to bring it up, I mean, obviously, the nursing home is a big liability for us, and obviously there wants to be a trend to larger and larger settlements coming out of nursing homes. And it wasn't that long ago that they were not included. Bruce, do you recall? They were not included in our liability. We brought them in.
Did they have a separate policy?
But there was a time we put them out there by themselves. And I don't know if that's a good or bad thing. I'm just saying that we did carve them out for many, many years. So that would be my other question is, are we better off carving them out of our overall program and putting them on their own? I don't know why we brought them in. I think we brought them in because they weren't insured at all.
Jim, you have to know. You've been here forever.
Well, I think it was they weren't insured. There's a question. They were just kind of out there.
How could they not be insured?
And we were on.
They were insured, they had their own policy.
Yeah.
Well, let me say this. You asked that? When I started on the county, we were 100% self-insured. We had no insurance whatsoever. So you know that. And that's because initially the market had gotten so bad, nobody would underwrite us, or it was so expensive. We were better off. So it does happen where we've been on our own. So I guess what I'm asking is just because of the markets, should we look at carving them out? Is there any advantage to carving them out? I don't know why they were carved out originally. Do you know? You remember, Melissa?
I do not.
I mean,
don't remember why, but it was recommended that we bring them back in.
At that time.
Yeah, it was
But now
recommended that we pull them back in.
but this is the first year that I can recall. I don't recall this happening last year. Maybe it did. It just wasn't stated. That we have probably half the eligible underwriters saying, we don't want to do this because of the nursing home. We won't even bid it. We won't even, or quote it, whatever it is. It's more quote. So I'm just saying it's an issue now. Maybe not for this year. We couldn't do it. It's a little late. But should we look at carving them out? And what are the advantages? What are the disadvantages? Well, I mean, I'm just throwing it out. I don't know the answers.
Sure, we could look at it. I think it would be significantly more expensive if it was carved out as opposed to being in the master program, but we're more than happy to do that.
When you do your analysis, there's a cost to having people not want to pay because potential.
Sure.
And so you say it could be significantly more, but if there's no underwriters, or very limited underwriters, that are willing to take on Will County because of the nursing home, what's the effect of that? I mean, I assume that the ones who do quote it are putting a significant premium on it because of the nursing home. I'm just assuming that.
Correct.
You know, so my question would be, going forward, not for this, what is that cost You see, we have to
Yeah.
see what that cost is, you know, and the difference between that and the current amount is, I just don't think, there's a simple answer.
Yeah, we can easily have it quoted without it. and
With or
see-
without?
Yeah, without and look to buy a separate nursing home program. I think where we will still see the cost savings from the current carrier, because overall, we're getting a very large discount for having all lines with safety insurance, so we do get that discount. If we're using one of these other guys, we're gonna lose the discount on the comp. But yeah, it's a
I'm
study
looking
that,
forward.
yeah.
I mean,
Yeah, that's just my opinion now. Looking at the top 35 claims, only 3 have come from Sunny Hill.
That nursing home is
No. Yeah. Yeah.
Means we have good staff.
Well, that's why maybe by carrying out, we can demonstrate too. They have an excellent record in all the things we have in place to reduce liabilities.
Sure. Any questions on liability? I can move on to comp, workers' comp. County payroll increased from 136,665,653,000 to 145,330,270, or 6%. The carrier did a really nice job of keeping the rate flat, which is great, and also providing that large discount because of the rest of the package. So the premium for the comp is basically going up because of the exposure change. Premium from $324,581 to $345,159. So looking at the bottom of my executive summary, casualty and fixed costs are going up 10.57%. Big portion of that is the property value increase, the markets, as well as the excess liability premium increase. Workers' comp from $324,581 to $345,159, or 6%, and that's exposure only. Overall, costs are increasing 1,425,735 to 1.5 million, 62,718, or 9.61%, which I think is an excellent result with the exposure changes and market conditions for what we're seeing on large insurers.
It's a great rate on the line.
I was going to say, if I can make a comment about workers' comp.
Worker.
Bruce, this is going to go more to you. I have to tell you, I know none of you were here. We probably had the most disastrous workman's comp you ever seen in your life.
Worker.
Our rates and our costs were twice the industry average at one point. Twice, you know. And Bruce, I know this is something that you've worked on for a long time. Mesro's helped us. There's been others along the way that have helped. But when I see what this program is today, to where it was when, you know, I started here, I mean, I can tell you, appreciate the great job that's been done on workers' comp. It's pretty
Worker.
worker comp.
Thank you.
Workers' comp. You know, Jackie wants me to be politically correct. I did not say workmen.
I'm a woman.
How if I said workmen?
I'm not a
We're all
man.
man. We're all man. We're all man. But it's generic man.
Yeah.
You know, few man. You know. So, but anyways, workers' comp. I just wanted to point out, Bruce, that you know, it's taken 15, 20 years to get it where we're at.
Thank you. I appreciate
You're
that.
stuck with it. We persist, and I think now we're really, I think.
We're doing a really good job.
Yeah.
Yeah, I appreciate that. Thank you.
That concludes it. There is a premium summary that you can see the line-by-line changes. The apples to apples renewal will increase your premiums 9.61%. If you decide to increase the retention and the liability, your premium increase will be 4.33%, saving about $75,300. And that concludes. If you have any questions, I'll just need a direction to go to.
Motion.
Jackie?
We never decided on $1 million.
I'm not necessarily interested in the $1 million part. I'd like another year of experience. Like Jim was saying, there may be a trend in these higher claims, and maybe not, but I'd like to maybe revisit it next year, because this sounds like this is the first time we've been offered this, what'd you call it,
Stratification.
stratification. I know where the stratosphere is.
You know, to me, I think that it's, the only thing I would say about the 750 versus $1 million is more of the trending on whether the underwriters are going to look for $1 million regardless. They're just going to say you have to go to $1 million if you want us to quote it. I think on the financial side, I think there's, I think the exposure is minimal either way. So I'd be more interested to see whether this is the trend and basically the underwriters are going to kind of force the issue. If not now, they're going to do it down the road. So that's what I would look at.
Yeah, there are forced self-insured retention increases. We saw that a number of years ago with the workers' compensation, probably about 10 years ago, right when we got on. When you look at the marketing summary, there is a carrier that will not look at retention lower than $1 million. There are a couple others in there that basically take the same platform. They just told me otherwise. They just looked at the rates that we have now and said, my premium would be higher at $1 million than theirs is at $750. So, yeah, we'll eventually get forced. We can keep the limits where we're at because it's very hard to go backwards. Once we go up, it's very hard.
Yeah.
Very hard.
I would say, I agree with Jackie. I mean, we should stay where we're at for a year.
All right, thank you for all your information. I think at this point we need a motion to move this to full board.
Motion.
All in favor? Aye. Opposed?
So we go forward with our current retention.
Okay.
Thank you.
Motion carries.
Thanks for your time.
Thank you.
Thanks.
Thank you, Jim. I noticed you mixed in a little stroll down memory lane.
Oh, yeah. I want you to know how much better it is now.
Yeah, it is.
It was
Okay.
a disaster.
All right, now we go on to other new business, and it's committee assignment request. First off is Land Use Development Committee with Tyler Markham.
Okay, I had a question about the signing the renewable energy. I thought that this committee was the one that handled that. So I guess my question would be, the Mary, shouldn't that be at executive?
Sorry.
The 100% renewable discussion, shouldn't that be at executive? Because executive's a decision-making committee.
Original process had come out.
Yeah, so I'm gonna make a motion to send that to executive committee.
Second. Motion made and second to move it to the executive committee. All in favor?
Aye.
Opposed? Motion carries.
Jim, you're hitting your paper. Get on your microphone.
Okay. Next is Finance Committee, Ken Harris.
Yeah.
I'll make the motion to place the committee assignment as amended.
Second.
All right. Made and second, all in favor?
Aye.
Opposed? All right, next we have public comment. Is there anyone from the public has a comment? Oh, Nick, Nick wants to be in the public again. Okay.
Sorry, I forgot to say something at Public Works, but this probably is more appropriate committee anyway. I've worked with Melissa and Rashawn on an issue, and I didn't bring it up at Finance the other day just because we had a lot of other lively discussion, but we talked at Public Works today about RTA and how we spend the money. And years ago, we undertook through an RTA grant a paratransit study around 2009, 2010, and we had a consultant selected through a qualification process, did a study. I didn't bring it with me today, but we had a business plan basically, or a plan how to do that. And back then we launched into a cooperative effort with the townships, with PACE and others, and I'm not going to belabor that whole history, but we've done good work in Eastern Will County, I think, working with the townships. We've brought Wendy Garlich on, who's done a great job, and we've worked with other agencies like the Area Agency on Aging. But it's challenging because there's always the uncertainty of funding streams there, and lots of paperwork and reporting and things like that. So long story short, there was a request that was distributed to board members about potential funding. It's difficult for me because I was involved at the early stage of this, and I always thought there was a possibility of the county funding some portion of that. But we, in talking to the finance department and Melissa, we think this is something that we do need to look at, but we may need to spend some more time on that, and especially in light of some of the conversation today at Public Works about how we spend RTA money, because that would be one potential pool of money. But that has a lot of strings attached, if you will, because of our existing rules that Mr. Moose just brought up, that committee about what we spend that money on. And I don't want to start a whole discussion necessarily here. I just wanted you to be aware of, we are aware of this. We're supportive of the paratransit program. I know many board members have been supportive of that. And there may be a need because there are some challenges. But in the point where we're at in the budget process, I guess, it's hard to make that change now, and I think without creating a lot of back and forth discussion, because there's a lot of things we could spend that money on, and it's not that any one is less important, but in the spirit of being responsive to board members who've asked about it, we think this is important, and we think we do need to have a larger discussion. But this could be a larger discussion about what's our long-term role in that process and how that money is distributed, because when we started this study, and I'm going on longer than I planned to, but I'll just say this, there was no real system in Eastern Will County. There was a small network out there through the Eastern Will County Senior Services that fell apart. There were existing systems in Joliet, in some of the other areas. The goal was to try to work towards an integrated system across the county, so that if you were in Beecher, you wanted to get to Joliet or wherever, there was a way to get there. It may take a couple stops, and we've made progress on that, and the short-term progress was getting to a mainline system like the University Park train station or what have you. But there's still a lot of work to be done, is my point, I guess, and we just want to be responsive to board members, but we also think there's a lot more discussion that needs to happen, and some may need to happen even after the budget's passed, because there are some challenges that are looming with the Area Agency and Aging funding. But there's also probably a larger discussion that will go through the next year, so that when we get to the future budgets, and once we have that discussion about how RTA money is spent, we may want to consider some changes. I know Mr. Moose has spoken on this a lot, so.
Nick, I actually wish you would have brought this up earlier. But I spoke about the RTA tax and basically saying street for road capital projects, and it's been our policy. And I did talk at Public Works today about going back and strengthening that position. But I would be supportive of taking a percentage of the RTA for public transportation. I mean, it does affect our roads and so forth. So when we talk about how we're going to strengthen it, or how we may change that resolution, or how we may create special funds, we absolutely should put public transportation in that discussion. and a percentage of the RTA maybe being used for that purpose. And of course, I think we have more work to do, as you said, because we also need to define what public transportation is, what the network is, and so forth. So we have work to do also. But certainly, I think that revenue was intended, I personally think was intended for, the real intent was for roads and public transportation. Public safety thing was thrown in by one particular county that they needed, but I mean, that was not really the spirit of it originally. But we have to bring it up again.
Well, and I don't want to belabor this point, but just for board members' consideration, we collect 24 million a year in RTA now, approximately. 12 million of that is spent before it even gets here because we're paying debt service on roads and some of the public safety things. So we really only have 12 million that's not obligated to spend, and so that's the discussion. And I don't disagree with what you're saying, but there was even just last month when we had the transit agencies come in and talk about the increase in the motor fuel tax, a portion of that, which is why we're not getting double the amount we were getting. We're getting 9 million before, we're getting 6.2 or something. Why we're not getting the full 9 million is because a portion of it is being directed to the RTA and mass transit. And some people grumble about that, but the RTA provides 2 million rides a day to people throughout the whole Chicagoland area. If those 2 million people don't have public service, if they can afford it, they could all be getting in cars. We don't want 2 million more people on the roads. I'd like to get 2 million off the roads myself, so, especially the slow person in front of me. But I mean, that's the discussion I think, Jim, we just need to have. And that's and what other grants maybe we can go after, or try to get some of that money from the RTA. Maybe they can up our grants, and that would help. But the other challenge, and this is, I'm sincere about this, is if the county chooses to put money in, it's not a net loss. Like we put money in and other entities take money out.
Yeah.
It should be an incentive for other entities, municipalities, townships, whoever, to partner. And one of the visions a long time ago was even the private sector, because if we could say to a mall or a strip mall or whatever, we're delivering 500 people a week or 1,000 people a week, it's a value to you to get those people to you. So help us keep that system running.
Distribution center.
Right, distribution center. This is where I think we need to present these complex issues, present what we know on this, because there are partnerships with PACE, with Beth Gonzalez, who's our rep for Will County. PACE is running buses from, I believe, Harvey to the Manhattan-Moni Amazon facility because there's not enough workers in that area.
Yeah, that should be helpful.
Right, and they haven't thus far in any big way as far as that. But anyway, it's a much bigger issue. I'm torn because this is something I put a lot of effort into 10 years ago, basically. And I don't want to say we shouldn't be funding it, but we've got to think through, and it has a lot of implications on our policies.
It's complicated.
So, because there are a lot of competing interests for those dollars, and what we have said we've done, what we've evolved to, and what we could do is all on the table. So thank you.
Thanks, Nick. Julie, do you have a question for Nick?
I actually do. When we talk about this subject, you know, we talk about Eastern Will County a lot, and I realize there's a need there, but I don't really hear anything about my area of the county in Naperville. And we have in our unincorporated areas a lot of elderly people who have, you know, been in Naperville their whole life, and they're in that position. They have a need. And we really have a huge vacuum out there. Also, Wheatland Township has expressed to me that they really don't get any help from the county. So I understand there's a need in Eastern Will County, but can we also, I don't know if you've looked at my county and determined that there isn't enough of a need, but I'd just like more information about that.
I can give you a quick response, and then we can talk more offline. We have met with, and that's part of my reason for pausing on this, is there are other systems around the county. It is a quilt work kind of different projects. But we have talked to Wheatland Township in the past, and part of the challenge is, and this is the struggle on all these systems, is the cost for paratransit is very expensive, and the townships share that cost. They pay approximately half, sometimes it's a little more, sometimes a little less. And Wheatland Township didn't want to, it was too steep a price for them, basically. But we've also talked to some disabled rider systems up in Wheatland too, that straddle DuPage and Will, and we looked at that too. It just wasn't financially doable, but that, your point is exactly my point, is that we need to look at this holistically, because the whole county is paying this RTA tax if we use that fund. Are we going to just distribute it in one area? Sometimes maybe the answer is yes. Sometimes it's like, well, we'll make it available to all the systems and try to link them or incentivize them to connect. And that was the vision of the study many years ago, was to go from silos to connected system so that people could get across the country.
What's their system?
Well, Ride and DuPage was the earliest probably adopter of this, and that's the argument for the county to participate. DuPage County puts a significant portion of money, I don't remember off the top of my head, but they put a significant amount of money into the system. Ride and Kane, which is also an older system, they put a significant amount of money into the system. So that's the argument for participating. But there's so many nuances. I don't want to get too far in the weeds, but it's challenging, and townships have been probably the largest adopters of this, because they're serving underserved areas, unincorporated areas that don't have fixed route. We know in Will County, the Joliet area has a lot of fixed routes. Bolingbrook has a few, but the Bus on Shoulder has kind of filled the gap on some of those, but there's still a need for seniors, disabled, and workers who don't have vehicles or can't drive for whatever reason, maybe medical reason. Those are still productive citizens that are getting to a medical appointment, to employment, and that's where the funding comes from the feds. There's different funding sources that come, but those have shrunk over time too. We had more money available generally as a community, and so it's tougher and tougher. But we have looked, and we're committed to looking at all areas of the county to try to make it work.
So Nick, very good point, and a perfect example in our area is that if we're looking for companies or organizations that will complement the need and can provide the services, in our area we have an organization called Ride Assist that has taken on this task, and they have volunteer drivers that are trained and certified, so they're not paid, and they get no funding. They don't get any financial support directly from the city of Naperville or any county, but they're very successful, and unfortunately they need to grow and to meet the need. But that's the type of a model that if we provide the support they need, there isn't that huge burden on the taxpayer, because they use volunteer drivers, and that's the type of a model that I think if we were to find out how do we help them succeed, grow, and meet the demand, and then hopefully we don't have to worry so much about where is the money coming from. But I know that's one of the, I've been talking to them out in my area, and I think we could look into something like that.
I mean, that may be the group we've talked to before, I'm not sure, but we definitely are open to other options. And just for the quick history, and Jim will agree with me hopefully, or correct me if I'm wrong, is when we started this, the county didn't want to operate a system, because when you operate, you have to buy the equipment or rent the equipment. You are responsible for liability, you have training, things like that. We have utilized PACE because they contract out through vendors, qualified vendors. They provide the training, they do the vehicles, for the most part they do the maintenance on the vehicles. There's pros and cons to that. Some people would argue it's too much, it's too little, but that's an easier way to system. So we're really like a middleman in that process with what we do now. But part of our original study did have the option of doing volunteer drivers, and it's just managing that too. Who's gonna manage it? Because
Well, again, we have organizations, if we can find these organizations, then we're not operating.
there's
I
a
think
cost,
that's the idea.
somebody is doing,
Somebody's gotta
there's some cost to it.
That's why you have to define what public transportation is, having an agency, like say Trinity that does, they have their own, are they part of a public transportation system? Public transportation means everybody has access, pretty much, so.
Well, in our system too, we qualify people. Since you're using federal money, you have to qualify, you have to register, and that's where it gets tricky. If it's a volunteer, they can volunteer for whomever, but that's a volunteer, it's not necessarily guaranteed. But with the federal funding that comes down to us, we have to register and lots of reporting, and because you've got to be accountable for that money, and if the right people are getting the services. But when we started this years ago, there was a problem like in the Joliet area, that the capacity was full. So if you called in at 6 a.m. for a doctor's appointment or whatever, there was no capacity. You were out of luck.
We still have that.
And it's still a problem. And if you're scheduling a doctor's appointment, you may schedule 6 weeks out, but you can't guarantee a ride to the day of. You can't really cancel. But the alternative to some of those is like, okay, you get a Medicar, well, that's hundreds of dollars. So the cost is an issue, how you operate it, but this is why we need to have a more robust discussion and delve into this and decide how far do we want to go in. And we've had, years ago, we had Mary Keating, who is the DuPage County, she's like the godmother of the DuPage program, and she lives in Kane, she helped set up the Kane program. She gave us a lot of information early on and helped us, and now she's the head of, it's like Human Services. DuPage has a lot of that in-house, and they run it through that department. It's like a Human Services division, like a department level agency at DuPage. So we could even bring her back, or somebody like her, to kind of give some comparables. But it's a big deal, but it's a need both from the disabled, the seniors, and the workers. And it's going to grow as our population grows and as especially ages too. So I just wanted to give you a heads up, and we will come back soon and talk more about this. But again, we want, in the spirit of, we don't want board members to think we didn't get this or we're ignoring it. It's just that it's a very complicated issue, and we can't do this at the end of the budget process. This has to be incorporated in because there's a lot of strings and decisions made. Because as we heard earlier, the RTA, there's different people have different interpretations of how that money should or shouldn't be spent. So
thank you, Nick.
Here at transit meeting next Friday, Monday.
Yep.
And Nick, you're always willing to accept input from the board members as it comes up. Stop at his office. Okay.
Mark, I just have one announcement. We have flyers up at the front counter from the Veterans Assistance Commission and the City of Joliet for their Veterans Day ceremony on Monday. Down, I believe it's at the Rialto, and then there's a ceremony. After the ceremony, there's a reception at the Historical Museum. So if you want to pick up a flyer, if anybody's interested in that.
Big deal. Thank you.
Sure.
Any more public comments? Comments from the public? Okay, next chairman's report, of which we have none. The only good report I can give you right now is we didn't get snow last night.
That's right.
And it's not raining so far.
Because it's too cold to rain.
That's right. Well, it could warm up just, don't say that, it could warm up just enough to rain.
Yeah.
You know, let's get that. So, we do have a need for an executive session necessary to discuss pending litigation. So, I'm looking for a motion.
Second.
Okay, motion and second, go into executive. All in favor? Oh, yeah, that's right.
I saw it first.
Yeah.